Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst. I'm going to show you why headlines may not be as important as you think they are. We're going to check in on the markets and the charts and where we stand with our major sectors, knowing that some significant volatility is coming the second half of February. These are the key levels we need to watch. Before we get to the charts, we have a new free ebook. The link will be in the comments of this video, Options 101, and it just gives you the basics, a little info about the Greeks and how they matter and how they move, some single leg options, how to hedge with options, etc. Check it out. All right, so we'll start on weekly time frames and zoom in from there, and we know we've been chopping around fairly sideways for the most part. The S&P 500 has been within this range now for the last essentially 2 months, and it is a range of roughly 5 to 6%. So we know the burden's on bears, and within this tightening range, I give a favor to the bulls and how we're going to break due to the prolonged trend and knowing that it's going to be tougher for the bears to win this battle because of that, but definitely have a game plan for both in terms of which ways can we break. And again, in hedge positions for my long IRA, and my IRA hasn't been moving a whole lot recently because I'm just waiting to see whether I'm going to exit those hedges or whether I'm going to add to them if we get a bear break. And so patiently waiting. But again, with regards to headlines, we know we're in a headline environment with all the info coming out from Trump and, these little headlines on Twitter and things like that. So we're aware of that, and we're aware that we can get short-term spikes in volume and volatility. But I cannot stress enough, one thing that, hurts me to see is so many people say, TA is useless. Just a headline comes out and everything shifts and, what's the point? When in reality, the most likely scenarios keep happening, and it's the headlines that are shaping them. And so here was me this week. And again, this is not a prediction. I'm not saying, look at me, I'm right, because I was 2 days early. This is Wednesday, where I'm saying keeping an eye out for a headline to cause the daily lower highs in the major indices and major sectors. And it ends up being 10 a.m. on Friday, we get consensus information. And the result of that is a big dump and our daily lower high. And so again, we have these, here's the NASDAQ on the daily chart. We just have this picture perfect equilibrium. And if you go back to probably our weekend video here saying the equilibrium is the most likely scenario, and it just keeps tightening up. And so the headlines have not changed anything about the most likely scenario that technical analysis and experience tells us will happen. And so, to end this past week was saying, this is the time to hedge. We're right up at resistance. If you've got long only exposure and you want a little protection, we keep getting opportunity after opportunity for those hedge positions because we keep rejecting from resistance. So we're in a scenario where the S&P 500 is tight. And so is the NASDAQ. And so we're anticipating we could, we've had a gap down open now 2 Mondays in a row. It's possible we get another one this coming Monday, but Mondays have also been for buying for the bulls. And so we're going to anticipate perhaps a little bit more pullback and then a break potentially the end of this coming week. And that's why I say volatility is coming the second half of February, because this tightening range will be broken by then. And then, of course, we need to see follow through. But again, I always want to look at it from both perspectives. So I say the bulls have the lean in their favor because of the prolonged trends, but I can also look at the weekly time frame and look back and say, okay, let's compare. If I'm a bear, what am I looking at here? And if I'm a bear, I'm looking at 2022. And I'm saying, all right, we V-shape off the lows, complete bull control, monster move, and then we get to the top, and look what the top looks like. It's a bull flag, confirms with no follow through, a little bit more, not much, a lot of chopping sideways, and then we roll over. And this looks fairly similar to that. Again, I don't think it's the most likely scenario, but you better believe there are 2 game plans. Here's that big bull move up, and then here's that sideways type action. So you better believe if we break bull with no follow through, then I'm going to say, okay, we got to be cautious here. And technically, the S&P 500 did break bull with no follow-through a couple weeks ago. But again, just something to be aware of. I like to put on my bear glasses to ensure I don't get overly biased in one direction and get surprised. So we're going to keep tightening up. And we're watching the NASDAQ and the S&P 500. Semiconductors have had a decent recovery, but it's a tightening daily range. Again, the most likely scenario. As soon as you see a 50% bounce retracement, but then you get back half of the bounce, you know an equilibrium is the most likely scenario. So here we are rejecting from resistance 251.46. We reject by less than $1. Again, a great top fish for bears. And now we've got a tightening range where we're going to scout, at least initially, a higher low compared to 235.12. So we got information that, more Trump tariff information is coming Monday or Tuesday or Wednesday, sometime this coming week, and going to be aware of that. But that may line up with what leads to a break of these tightening ranges. But I'm keeping an eye on SMH as well because, if the NASDAQ breaks bull, but SMH can't, I know the NASDAQ isn't going to go very far. If the NASDAQ breaks bull, but the S&P 500 doesn't, I know the NASDAQ's not going to go very far. It's like a relay race where they're all on the same team and they all need to be showing me that they're doing the right thing. And if somebody is holding things back, we definitely need to make note of that. So NVIDIA had relative strength this week. Look at that strong close. Nice pop at the end of the day on Friday, right back to the high. And so relative strength in the sense that it was relative weakness on the initial leg down. Now we've broken the bounce high. SMH hasn't done that yet. So we still have to confirm the daily uptrend. And again, just back to that relay point, one of the points I made to start this week was NVDA is breaking bear from a base of support at 116, but SMH has space for the daily higher low. So keep an eye out for an NVDA bear break with no follow through, because if SMH holds support, that's how it's going to play out. If I was not watching SMH and I'm only watching NVDA tunnel vision, I don't have that information and I maybe get faked out by thinking of going bear because NVDA has broken 116. It's all these pieces of the puzzle that we have to be putting together to help give us clues. But NVDA will need to confirm the daily uptrend eventually. And we'll keep an eye out. And then we'll zoom out and scout a weekly lower high. But at this point, look at the monthly. It's still a strong monthly uptrend. We've had monthly EMA 12 support for 2 years at this point. And so that will have to be lost if something is going to significantly shift. Tesla. What is going on? Plan limits. I don't know what that's about. Tesla, we've got a weekly downtrend confirmed. So lower high and lower low. And I was keeping an eye out. They're not going to let me draw. Pause. All right, so Tesla has confirmed the weekly downtrend with a lower high and lower low. So now what? We zoom out. Whenever something comes to a conclusion on one time frame, you zoom out to the other one. Monthly inside bar bear break. We know a monthly higher low is the most likely scenario, but this diminishes the probability of a bull flag that we were keeping an eye on. And so I will be making an attempt at a monthly higher low, but I'm very patient. There's not a good headline flow for Tesla right now, just in terms of, other countries aren't pumped about what Musk is doing and these tariffs, and some countries specifically going to target Tesla if they're retaliating in tariffs. Anyways, I haven't made an attempt at a swing position since exiting at an average of 440. So I'm just nice and patient. If we get to daily oversold, I'll make an attempt. I'll make an attempt for daily oversold to try and mark a monthly higher low, because that has happened in the past where that was the setup. So I'll be keeping an eye out for that. But I was watching for the possibility that this was a falling wedge trying to shape up. But we bear broke and followed through in extended hours a good bit. So this is probably off the table. I'll leave it up and, keep an eye on Monday, Tuesday. But I'm mostly going to be watching for ideally daily oversold. And again, being very patient. I'm in no rush because bears are now proving things on the daily and the weekly. And so it can take a while. Financial sector, extremely strong, V-shape back to all-time highs on the weekly. Lots of space for a weekly higher low to be the most likely result of next consolidation. The daily consolidation, pretty contained. We've got the last higher low at 50.41. That was a nice response to hourly RSI getting crushed, set the daily higher low into a new all-time high. Started to pull back on Friday with many things, but anything above 50.41 keeps the bulls in complete control if we keep that uptrend going. And again, that hourly got real beat up on the start to the week, but a buying opportunity. One thing that I keep reminding myself is, yes, these dips are buying opportunities, but the market is training the participants to buy every dip. And we know that when a real top is in, that's when it gets painful. And so I just always keep that thought in the back of my mind. There will be one time at some point when it's not the standard buy the dip scenario, and the first wave of dip buyers will be in a lot of pain if they don't respect their stop losses. This is an environment that trains bulls to not care about stop losses because it always works out and we always recover. Just be aware, there will come the time where that's not the case. IWM, I was watching this megaphone, not watching it anymore, but we can clearly say that resistance at 230, we keep struggling at that level, can't close above it. We're just staying on the same chart now. Can't close above 230, so that's our clear resistance level. Anything above 220.67 is a higher low, but again, extremely choppy. I've got no clarity on this chart aside from that resistance and that support. Again, I haven't traded IWM in a long time. No plans to do so in the near term. And it also doesn't give me a ton of information just because, it's not a huge impact on the market. When the market is all bull, I keep an eye on IWM to show me a gauge of how risk on is the market, but no information for me here anytime recently. Healthcare. So healthcare is getting a little toppy on the daily here. And just keeping in mind that we've got a great bounce off the lows. We haven't confirmed a weekly uptrend yet. So that's going to have to happen. I'm watching for weekly consolidation sooner rather than later. It's a bit of an inverse head and shoulders. Can we confirm the weekly uptrend? And again, keep in mind, bigger picture from a long-term patterns video I did to start the year. I am watching for a monthly head and shoulders. And if we are going to see any meaningful weakness in the market, this will be a monthly head and shoulders. So I don't have high conviction in this pattern, but I know, again, it's just an if-then scenario. If the broader market is going to see any kind of weakness, then XLV will be confirming a monthly head and shoulders into annual consolidation, and it'll be the first annual consolidation that we've seen aside from the CVID flash dump in 15 plus years, which would be very meaningful for me. So keeping an eye for any cracks, nothing significant at this point. I'm keeping an eye on lithium names. I don't love the liquidity of this ETF. There's gaps and it's not a lot of volume and it's not liquid, but I love you show me this chart and you say, what's the most likely scenario? You don't have to tell me what it is. You don't have to tell me what time frame it is. And it's the same reason we've been able to be on point with the daily equilibrium in the futures. We scout the equilibrium. We're scouting a 6-month higher low, and then we'll scout a 6-month lower high. And this is a pattern that can play out for the next 4 years. But I also love the back test of this previous resistance. This was the all-time high, and then we rejected, and look at where we're trying to find that 6-month higher low support. So I'm looking for a potential year-plus position in lithium, and knowing that a 6-month candle takes a long time to play out, being real patient, but we did just confirm a weekly bear flag with no follow-through. And so if the bulls can confirm a daily uptrend from here, and I have a small position, I would like to add to it, but I'm not comfortable adding at the moment. I think my average is around 41, maybe a little 41.50, but we need to see a daily uptrend confirm. If it does, that significantly increases the probability of a monthly higher low. And if we set a monthly higher low, we know we then need to confirm a monthly uptrend to set the 6-month higher low. So it's one time frame at a time, and it's down to the daily at this point as far as what the bulls need to do. All right, quantum name. So quantum is doing exactly what we thought it would. And why? Because an equilibrium on the weekly chart was the most likely scenario. That should be the theme of this video. Anticipate equilibriums, and you know the most likely scenario when you have enough experience, when you've seen enough of them play out, and it guides you so much. And so, again, I have traded these quantum names a fraction, maybe 5% in the last 2 weeks versus what I traded in the 5 weeks prior. And so here we have IONQ, which is the lead bull, with a clear equilibrium, high, low, lower high, higher low. And this weekly equilibrium is going to break. If not this coming week, then the following week. Can't get much tighter. Amazon sold their full position after hours, so we had another leg down. And key support is going to be the zone 35.75 to 37.21. Key support zone potentially in play this coming week. But in addition to IONQ, we've got RGTI. Again, look at this range. This is now 2.5 weeks within we'll call it a 27% range. And you have one candle that is a greater opportunity. So this one day had more range than the last 2.5 weeks. which is why I am pumping the brakes, because we could anticipate that things were going to slow down considerably. And so again, this tightening range on RGTI is going to break probably this week. I'm viewing this as a high, low, lower high, and we're coming down to support. These are the two strongest names in the sector. Look at QUBT. It's just a slow bleed since it bounced. Look at the daily range. Look at here. It's just not even in the same universe of comparison. You've got days here, 54% range, 38% range, and now we've got days of 7% range. It is literally 20% of the opportunity on any given day, the last 2 weeks, versus all the days in the prior weeks. I can't stress enough, knowing this, to adjust your trading style to the anticipated changing market environments. Aside from this, we have names like, I'm still watching QBTS, same deal, but QCOM, wrong one. If you remember back in the video, was it QNTM? QMCO said this name might not ever see that high again. And here we are now needing 450% to get back to that high. And again, all we got to do is look at the prior examples. And QUBT is another one where you just spike and you give it back. And so people told me quantum's the next thing. You're wrong. It's going to keep running, blah, blah, blah. We're not going to see those highs anytime soon. IONQ maybe could pull it off, but the majority of these names are not going to see that high probably this year again, and maybe longer, if not ever, depending on the name. All right, the dollar. The bears really want to see the dollar confirm this weekly downtrend by breaking 107, and then we would zoom out for monthly consolidation and a monthly higher low, but that is a key support level that we need to be keeping an eye on. Gold has been just fine. Blue sky breakout, monthly bull flag confirming. Inside bar bull break is the go signal, and another leg up. Plenty of space for a weekly higher low. Still in a daily uptrend. Again, just one time frame at a time. I don't even need to zoom out. If we got daily EMA 12 support, lose it, I'll zoom out, and then I'll look for a weekly higher low. Silver still has work to do. It's trying for the monthly higher low off EMA 12 support. And it got it, but we got to be cautious of the head and shoulders. So again, we're in an uptrend. The bulls had control. The fact that gold's at an all-time high is an added bull check mark, but we just have to put our bear glasses on and say, if this is a monthly head and shoulders, it won't surprise me. I identify it's a possibility. I then zoom in and watch for signs, whether it's shaping up or not. But we've got bulls needing to confirm. No. I mean, maybe it'll end up being a weekly inverse head and shoulders type of thing. Let's go to a 7-day time frame. Never looked at this time frame, but just knowing that there'd be a little clarity there, something like that. But just got to be cautious because silver is not as strong as gold. Oil. So oil had this tightening range. We knew volatility was coming to start the year. We got bull break with follow through, but we knew once we break an equilibrium on a shorter term time frame, we zoom out, and we were watching this 2-month equilibrium and saying if we do not break 80 on this futures contract, if we do not break 80, we're going to remain within a long-term 2-month equilibrium. And we can remain in this pattern for another couple of months because the most important support is 61.61 and the most important resistance is 80, and we're almost right in the middle of that range. And we now have space on the weekly. We're still looking for a weekly higher low, but again, retracement rules, Google chart guys, Fibonacci, retracement rules will have us watching for a tightening weekly range eventually. But oil is going to get volatile the second half of this year when this 2-month equilibrium breaks. It already got volatile, but even more so. Energy sector, trying to set a weekly higher low. Headlines definitely impacting it. I'm keeping an eye out for the possibility of an inverse head and shoulders on the 4-hour, but we did pull back more than the bulls wanted to see. It's still possible, but we need to be green essentially Monday and Tuesday. And then if this were to confirm, the weekly higher low would be set, and we would then look for the weekly equilibrium to continue tightening up. But burden on bulls to set the weekly higher low, they have not done so yet. Natural gas. Weekly inside bar, also trying to set a weekly high or low off EMA 12. There is space for a potential lower high because of the retracement size. So we got to be cautious of that. But first things first, bulls need to break the inside bar with 344 for that weekly high or low to officially be set. All right, that's what we're looking at in the week ahead. Again, this is a period where the broader market is going sideways, and I loved the quantum volatility when we had it because I didn't care what the broader market was doing. I had all the volatility I needed over here, but I haven't done a ton in terms of trading activity the last 3 weeks. Part of it intentionally because I've been in flow state, and generally when my P&L curve is going straight up, it usually ends with a hard fast drop because I get overconfident and I just get used to bailing myself out of any trade that goes against me, and then one will really go against me. But I've intentionally pumped the brakes to ensure that I just start going sideways with my P&L curve a little bit here. And again, the market environment is a large part of that. So remain patient and wait for clear breaks and have a game plan. Long break, what are you going to do? Bear break, what are you going to do? All right, do good things. Thanks for watching. Likes and shares appreciated. Here's some main.